folks, welcome to the REIN channel. I'm Patrick Francie, and today I am joined by realtor extraordinaire with EXP, Jordan Spitters. Jordan, thanks for joining me.
Thanks for having me, Patrick.
Now, Jordan, we're going to cover a few things, not the least of which is a recent announcement by our federal government that they're going to fix this housing crisis. The good news is they admit that there's a crisis. They are going to fix it. We'll talk about that a little bit. And we're also going to unpack a little bit about what's going on in the real estate world for the Fraser Valley, a bit of lower mainland. Hell, we'll just talk about a whole bunch of things when it comes to real estate and what it means to investors. So without any further ado, let's get this conversation rolling.
Sounds good.
So Jordan, let's start this conversation with, what the government recently announced, our federal government, in terms of wartime housing. What does that mean? Both you and I have a kind of a view of it, but let me hear from you first, what you hear in that announcement as somebody who's in the real estate industry for many years. Tell me what you hear in that announcement.
Yeah. So, I want to be optimistic. Let's say that. I unfortunately, when it comes to government announcements, it's generally a day late and a dollar short. And we've been talking about low inventory for what, 2, 3, 4 years now. But they're finally cluing into it, realize that we're low inventory and we're not building enough homes to keep up. So they've dusted off an old World War II policy, came about when the baby boomers were coming back from World War II. And they had a pre-approved catalog of homes that were already engineered and could easily be thrown up. From some reports I read, they were throwing up homes in as quick as 36 hours. Mm-hmm. So those are the little box homes that are still all over Canada. We're going to see some sort of new catalog of homes built for the 21st century that's pre-approved by the federal government, and they're claiming that it will speed up the approval process and get shovels in the ground faster. I think.
Well, so let's unpack that a little bit. At the end of the day, when I looked at the announcement, I went, okay, I actually agree with that announcement. It was several months ago that I was having conversations about something similar to this. Why don't we just put a series of homes together, build them? Again, I didn't use the term wartime homes, but I knew that why don't we just build some really fundamental, basic 1,000, 1,100 square feet homes, make them current, make them nice, given what the kind of the style is these days, and you can have different versions of them. But my addition to that was that let's build them factory. Let's make them factory built homes so that they're under, number one, controlled conditions. Number two, you don't need as many tradespeople. You can have tradespeople on the factory floor that are skilled and know the code and know how to do things, and then you can have a whole workforce that is not ticketed journeyman tradespeople. And it's not to put them out of work, by the way, because there's still work to do on site. So in other words, bring this all together, factory conditions, factory tolerances, controlled conditions, production can be very high, and then assemble on site. And that's where you would actually tap into a different series of, or a different, level of skilled trades, and bringing it all together, making sure that it has a quality and meets code. So that's my version of it. You imply it, I'll just really say it out loud. Listen, when it comes to government, it's really going to be, if they take control over this, it's destined to fail. It really is a question of how are they going to execute. And the only way they're going to execute is get it out of the bureaucracy of government and get it into, at some point, maybe through tax incentives, maybe, Jordan, where they give it to private business, SMEs that can pull this off, that understand margins and profitability and costs, and not tied up in the bureaucracy of government. So that's my kind of long-winded way of shining a light on it, but I think it's a good idea.
Yeah, I agree. And look, it's not like this has not been done in the past. Obviously, it was done through the 40s, through the 70s. We had it here in the Fraser Valley in Vancouver, the much derided BC boxes in the 80s. It was to solve a housing crisis then. These were pre-approved, easy to throw up houses, and people hated them at the time, and now they're kind of becoming more of a loved staple of the community. So I see kind of the same thing happening here. Hopefully, my concern is that whenever something is designed by committee, it's never designed to its peak potential, and I think there needs to be regional concessions based on the needs of different provinces and different areas. If we have just one federal type of housing that's the same for Atlantic Canada as we have in BC. I don't know how well that's going to be utilized. And my other concern is that if government starts to wade in and they have more control over this sort of thing, that it tips too far to the other direction, where we're told that, well, it's not a pre-approved housing plan, so it's going to take even longer to get your home done or approved. So, but the way that they're presenting this, I think, is a little bit is kind of missing the point still. I mean, they're talking about how it will make it much easier for insurers to go and review the homes. Insurers are not the reason that we don't have shovels in the ground. It's the permitting and approval process of the municipalities, of the cities. That's not changing. I mean, at the provincial level, we have a new homes for housing or homes for people housing plan. But we still don't have legislation from that out until spring of next year. I don't see how this necessarily is going to immediately address municipalities and their very slow timelines.
The single family detached space is going to be thin. That's going to be what it is. The condo market in both Vancouver and Toronto, for example, remain robust in terms of what they've got for supply, but anything that looks like a detached property is pretty thin. There is some rental inventory that's increasing, very, kind of specifically built for rental. We see, people playing into that space, but back into it, when we look at builders, even it's hard to make things pencil given what's happening in the tax world, what's happening in the interest rate world, what's happening in the labor world. We still have a lot of challenges to face, that we face in terms of housing. I want to go back to something, we talked a little bit off camera, and you're saying, you're seeing within the Fraser Valley, Lower Mainland, sales aren't off that much. Prices are off a bit, but because interest rates have flattened out, now we're starting to get things normalized. You're still seeing some reasonably good activity in the market. You want to expand on that a little bit, Jordan?
Yeah, I think we're kind of back to status quo as far as seasonality is concerned. I mean, if we're looking at, say, average pricing in the Fraser Valley, it's pretty flat year over year, but sales are up significantly. I mean, Abbotsford detached sales are up almost 25% month over month, but the average price is only 0.3% change up year over year. So what we saw this last springtime, we had 3 stable interest rate periods and the same sort of low inventory. And I say low inventory, when I say that, I mean good low inventory, well-priced, well-positioned low inventory. There's lots of overpriced stuff that's sitting on the market and people just are not pricing it effectively. It changes, it skews the data to make it look as if the market's moving slower than it actually is. But the well-priced, well-kept homes are still selling within a week, 2 weeks, and for very close to list price, 97, 98% of list price.
Wow. And I mean, let's face it, demand is demand. I want to go back to something around all of this is that, let's shine a light on the one thing that we have to consider, which is the headlines that we're looking at right now are all focused on what, end user buyer, whether it be first time or next time home buyers. That's primarily what all these headlines are about right now. Investors continue to get thrown under the bus as it's all our fault. It's all investors' fault that we're having this supply issue and, prices out of control. Such a narrow and kind of naive statement to make, but they're being, I guess, really, blamed for all of the challenge. I'll just go there with that kind of languaging around it. It really is a vilification of investors, and it's just so not true. In terms of the housing challenges that we face, investors being part of the problem are so down the list that they don't even really matter. Now, I want to go back to something, though, from an investor point of view, which is to say demand on the rental side of it remains incredibly strong. That's not going away anytime soon. So if you as an investor, or if you are watching this as an investor, keep in mind that when we look at what some of the changes are, let's talk about British Columbia. And I want to get to where they've taken off single family zoning, which will be, I guess, officially approved. Did I hear you say in the new year? Is that initiative happening today?
Yeah, so I mean, that's what they've said is the legislation is expected sometime in spring 2024. And that'll bring in the new missing middle zoning, allowing for, having 4 properties on one residential lot. Like I mentioned last time, I'm still hopeful that if you have existing housing, that you can go in and maybe renovate that and add multiple dwellings to a residential home, because there's changing the zoning will help long term, but it doesn't solve the problem in the short term. We need to have housing immediately. And if they ignore that, I think they're going to be missing the mark. But I'm hopeful that at least in the long term, there'll be more inventory thanks to these changes.
Mhm.
But on the flip side, it still takes the municipalities playing ball. And by the sounds of, I mean, listening to different mayors, some of them are going to have to be dragged kicking and screaming. They're not there for it. And I understand where they're coming from, because increasing density significantly puts strain on infrastructure, and they didn't
Mhm.
plan for that. Now, I would say that's a short-sighted view of the municipalities. I would rather have people in homes with crowded streets rather than on tents on those on uncrowded streets, but that's just where I land on that. Look,
Well, I
the
think
fact
there's the only comment I would have around that is I'm sure the municipalities have some legitimate argument in terms of infrastructure.
absolutely.
So if you've got a street that's set up that, was built years ago, and, you look at sewage, you look at water drainage, you look at all the things that it takes, power, grid, all of those things. And, all of a sudden you're increasing it 30-40%, let's say, on any given street.
Mhm.
What does that actually mean to that infrastructure? And
Yeah.
then we have to look and say, okay, well, what does that represent to the homeowners in the area when their taxes have to go up to accommodate the rebuild of, ripping up a street to put expanded water lines in, sewage, power, whatever that might look like. I think there's probably some very legitimate discussion or argument that they have for that we have to pay attention to.
I
That
agree, and they are they are making changes on that legislation to the way that development charges will be
Yeah.
collected and how they're going to be implemented. So, like,
Mhm.
from what I've gleaned, like I said, I still don't have the exact information, but they do seem to be at least be looking forward to that sort of challenge. So I'm
Mhm.
hoping that it's covered, but we're still 4 months away from knowing how that looks.
And how it's going to be.
Yeah.
Now, from an investor point of view, are you still seeing some opportunities for investors in terms of? So first off, when we look at that legislation, let's just finish that conversation a little bit.
Mhm.
Are you expecting? And there's some people that are anticipating that individuals or organizations with deep pockets will in fact land bank, just go in, buy lots. A friend of mine who's a realtor said, he just sold a property in Burnaby, total tear down, 1.6 million. He says it makes no sense from a math point of view, but when you
Mhm.
consider the fact that if that legislation goes through, there'll be either a 4 or 6plex that he'll be able to put on that particular lot to max it out. So in his case, he's saying my buyer is running the risk of banking that property, knowing and believing that legislation will go through and he'll be able to take it and turn it
Mhm.
into a multifamily lot. What's your thoughts on that? Are you hearing that, seeing it? Any
I
discussions
would
around
not
it,
be
Jordan?
surprised to see that same thing. I mean, we saw the same thing happen in Abbotsford. It was about 5, 6 years ago when they released that OCP with the new urban infill 3 designation, and a lot of single family dwellings were then able to be subdivided, and you were able to, in a lot of cases, actually put 3 residences. You'd split them up and make them
Mm,
those kind of skinny mini style homes, and the prices on them skyrocketed because the valuation was on the highest and best use. So
mm,
absolutely, I think it's not going to make individual lots any more affordable. I guess the idea would be that once those homes are built and you have finished product, that you've got shrinkflation, I guess you can say, on the
yeah.
pricing, and it makes it more affordable that way. But you're not getting more homes for the same value of money. You're just spending less
Yeah.
money for less home.
So, okay. So complete that side of the conversation. When we look at the possibilities in terms of what investors can do in this particular marketplace, are you seeing anything there where there's some opportunities to actually get deals done, given the current market conditions, Jordan? Or does it remain a tough market for an investor to get into?
I mean, it remains challenging. It's going to remain challenging as long as interest rates stay a little bit on the higher side. I mean, I'm
Mhm.
hoping that we've reached the top end of that. It's tough to say. We still hear that the Fed is going to increase rates, and we're going to follow behind them. So no one telling you that we're out of the woods yet knows for sure. So definitely hedge your bets. But I mean, we've seen prices come off in a lot of markets. I mean, Chilliwack, the average detached now is roughly around 840,000, down from 1.1 million at the peak. So there's definitely opportunity there. And if there's now chance to go and buy a larger lot, buy a home that already has 2 suite up and down, and then you maybe can add a laneway home or a coach home behind that garden suite. then there's definitely possibility and opportunity there. But you have to be, they're not going to be presented on a silver platter the way that they have been for the last few years. It's going to take more work, more diligence, connecting with the right people that have their nose to the grindstone and are actively searching for these opportunities.
Yeah. I think that's a fundamental that, it's something that we often share is that, everybody wants to make a lot of money, and that's great. And they want to create that financial future. And, buying real estate, and particularly now more than ever, it's like looking for gold or diamonds. You don't walk down the beach picking them up off the beach. You got to dig, you got to blow things up. You got to really excavate, if you will, to find big gold and big diamonds. And that's the way it is in the real estate world as well. Jordan, I want to say thanks for a little bit of an update what's going on. I think there is some optimism. And by the way, Powell did come out the other day and suggest that there may be as many as 25 basis points reduction in interest rates in 2024. He actually said that out loud, a much more dovish outlook. So we'll see how that all unfolds. But I think that if the Bank of Canada really pays attention to the lag that's starting to show up economically, they would be remiss to keep rates where they are. Certainly raising rates would be a catastrophe. But then again, we don't know what their thought process is. If we think common sense is not going to work. So, I don't know how we think bank.
Well, and if you keep that in mind with how we saw the market change this last year, I mean, we only had 3 stable rate periods. That was a zero change. And we saw a price increase of about 10 to 12%, depending on the city. So imagine if we had, a 75 basis point drop, the dam would break. So
I don't see it happening here. I don't see it happening here in Canada. But then again, trying to anticipate what our finance minister and our Bank of Canada, Tiff Macklem, Freeland, who knows what they're going to do. So that's the skepticism and cynicism that I have recently kind of found myself looking at, shaking my head, going, nobody knows. It's a bit of a crapshoot. Jordan, thanks for your time as always, my friend.
Thanks, Patrick.